Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. In this video, we will be analyzing 3 articles, to where the first one is titled Palantir Technologies Inc. PLTR Gains as Market Dips, What You Should Know. So in this article, we're actually going to be reviewing their upcoming earnings and revenue which they could bring in on their approaching earnings report, and whether or not that is going to be positive or negative news for investors. Up next, we'll discuss an article regarding the Palantir paradox, balancing bubble fears and artificial intelligence excitement. So in this article, we're actually going to be going over their price targets and what the future of this company has in store for them regarding upcoming news and catalysts. Then lastly, we will be analyzing an article titled, Is it too late to buy Palantir stock? So this is going to be very relevant for investors who have yet to purchase Palantir stock, or maybe if you already own Palantir stock, maybe you should readjust your overall allocation or exposure to this overall company to make sure you are being a wise investor and practicing proper risk management. So for more videos on Palantir Technologies, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube, but if not, don't worry, by subscribing you will receive this content for absolutely free. So with that being said, I say let's dive right into today's stories. Palantir Technologies, ticker symbol PLTR, is a big data and analytics company which serves both commercial clients as well as government agencies. Palantir has been known for very good artificial intelligence technology, and recently their share price is reflecting their market leader position. And we are seeing even more bullish excitement today to where the stock price is surging by over 6%, putting them in a very bullish pattern, which is fantastic news for Palantir Technologies investors. On top of that, Wall Street is looking for positivity on Palantir Technologies' upcoming earnings report, to where on their next earnings report, they're anticipated to bring in earnings of 5 cents per share, which would represent a year-over-year growth of 600%. On top of that, they're also calling for quarterly revenue of around $530 million, up around 12% compared to the same period but a year ago. Palantir Technologies for the full year is estimated to bring in 21 cents per share on the positive end and $2.21 billion worth of revenue in total for the year of 2023, and that means these results would reflect a year-over-year change or increase of around 250% in regards to their earnings per share and around 15 to 16% for their overall revenues. So very strong estimates and predictions coming in on their upcoming earnings report as well as their entire year earnings report, which should invigorate investors. However, the question now is, should investors still invest into Palantir Technologies considering the artificial intelligence hype and fears of a potential bubble being created, meaning that once it pops, Palantir could fall down in their share price rather aggressively. So we'll discuss even if that could happen or even if they're in a bubble. The author goes on to say that there's no denying that Palantir Technologies, ticker symbol PLTR, has caught the attention of multiple types of investors and traders due to artificial intelligence being a red-hot topic throughout the year of 2023. One analyst particularly pointed out Palantir's correlation between generative artificial intelligence technology and Palantir's overall solutions, meaning that as Palantir becomes more of a household name and artificial intelligence becomes more mainstream, this is going to further boost Palantir's overall share price. And experts on Wall Street seem to agree and suggest that investors should actually be cautious of this correlation, because if anything were to happen, or if this is a bubble and it pops, the share price could pull back rather dramatically. A Bank of America analyst even said that Palantir is positioned to be the dominant player in generative artificial intelligence. They said by providing a near-term solution agnostic to a preferred LLM or a large language model, compliant to tight security, data privacy, and regulatory requirements with demonstrated use cases across sectors, Palantir Technologies is primed for future growth. That's why Bank of America analysts actually recently raised their price target for Palantir stock from $13 up to $18, which is absolutely phenomenal. On top of that, Bank of America did issue a warning, however. They said that the speed and magnitude of the stock appreciation for artificial intelligence-related companies, including Palantir Technologies, has started to raise market concerns about a bubble, meaning that the artificial intelligence companies who have been supported by this artificial intelligence hype could end up pulling back very dramatically and drastically in the future. So this is clearly problematic if a bubble either has started or will start in regards to artificial intelligence technology. However, for brave investors who dare to invest into Palantir Technologies right now, you still could be sitting on a multi-bagger investment going into the future. And although Bank of America analysts are very bullish and positive, a Raymond James analyst is not as positive, considering that he downgraded Palantir's overall stock price rating from strong buy to outperform. But overall, at least he didn't lower it to hold or sell. Now, the general consensus among Wall Street professionals is actually a hold rating on Palantir Technologies with an average price target of around $11.13. Meanwhile, a portfolio manager has warned investors not to be overeager and buy up too much of this company too quickly, because he believes that Palantir will pull back in their overall share price and that it's too early to really see the conviction and fundamentals of Palantir regarding how they're playing into artificial intelligence. However, I actually would disagree with this fund manager, considering that Palantir Technologies has been operating off of artificial intelligence models way before it became mainstream. However, I do want to agree with him that we don't want any stock to be divorced or separate from their overall fundamentals, and I think Palantir could be entering into that territory, which is rather dangerous. That's why the author instructs investors to wait for Palantir stock regarding their PLTR share price to pull back and then invest. That way you completely protect yourself against the option of a bubble forming, or even if it already has. So instead of chasing the price of Palantir Technologies, he says to wait for it to pull back to around $12 and then invest and then hold the position for the long term. But I would love to hear your thoughts about that down below, and honestly, I think that is pretty good general advice. But now let's talk about, is it too late to buy into Palantir stock? And this is where we're going to weigh both the bullish and the bearish scenarios against one another. So Palantir Technologies has been using artificial intelligence way before it was cool and or mainstream, meaning that Palantir is leagues ahead of their overall competition in regards to artificial intelligence and language learning models. Lately, artificial intelligence has been red hot in the market and it's being used as a buzzword. However, Palantir has been using this technology literally for decades. In previous videos, we predicted that Palantir's share price would surge, and that's exactly what we have seen, considering that it has risen nearly 140% throughout the year of 2023. This then begs the question, is right now a good time to buy stock in this overall company? Well, let's find out and weigh the overall pros and cons. Palantir's customer base is split, as you know, between government and commercial clients, which in my view is very good. Government clients give them steady contracts to where even if the economy were to crash, these larger government agencies, which are funded by the government themselves, will continuously use Palantir Technologies despite a macroeconomic pullback. On the other hand, we have their customer segment, which is growing very rapidly and in my opinion will eventually outpace the amount of revenue which they are obtaining from their government segment, meaning that they have way more growth to achieve in that particular segment. Lately, Palantir Technologies PLTR stock has surged by around 6% up to $16.26, while very bearish analysts believe this company could fall as low as $5, and other analysts, like we talked about earlier, raised their price prediction from $13 up to $18, meaning that these are the most up-to-date price targets for this overall company. But now we're going to decide who is right here. Palantir, with their artificial intelligence platform, also known as AIP, is really going to take this company to new heights, considering that they are taking a large amount of technology to make large language models work to where they can utilize and generate generative AI chatbots to help someone learn how to use their overall products more efficiently. On top of that, the CEO, Alex Karp, even said that the demand is like nothing he's ever seen in the last 20 years of being involved with Palantir Technologies, meaning that both the government and commercial uses for this technology is essentially untapped. Like we went over in the first article, their finances are radically improving, and in Q4 of 2022, Palantir became profitable, and they posted their first operating profit in the first quarter of the year of $4.1 million, and that is anticipated to scale even more aggressively as time goes on, while their revenue is anticipated to grow by a 12% clip, which is less than impressive. However, as time goes on, that is supposed to scale upwards between 16 and 19%. So literally, in 2023 and 2024, if we just finished 2023 2023, Wall Street analysts expect their revenue to actually increase as time goes on, jumping up from that 12% to that 16% or 19%, which is very good. However, there is a problem here. Palantir is trading at a rather high PS ratio of around 17 times. For me personally, I would want to buy this company below a 10 PS ratio, which is exactly what I did, and that's exactly what I advocated for in prior videos. But even with their current growth rate, Palantir having a forward PS ratio for the results of 2024 still puts it at 13 times sales. So again, you are buying this company at a premium. But if you're a long-term investor, this shouldn't really bother you that much. On top of that, we also have a few other accounting ratios that you definitely need to be aware of. For instance, their PE ratio or forward PE ratio is 72.05, and ideally we would want this a lot lower, being much more comparable to their overall industry average, which has a forward price to earnings ratio of 22.82. So essentially, we need this to lower dramatically. However, when we look over at their PEG ratio or their PEG ratio, it's only 1.27, which is lower than their industry average of 1.63, which is very good. And the PEG ratio essentially takes the company's expected earnings growth into account when generating this. Ideally, we would actually want this around 1 or below 1, but considering that Palantir is set to outpace their overall industry in this regard, it's overall pretty positive. So at the end of the day, what should investors do with Palantir Technologies? Well, this particular author says that investors can most certainly still buy Palantir at a premium, and if they plan to hold it for the long term, a small position would be the wisest thing to do in this overall company, to where he advocates you invest less than 1% of your overall portfolio. And you all thought that I was risk averse because I advocate for less than a 5% initial allocation. So clearly I'm around 5 times more risky than this overall financial reporter. But I think a 5% initial portfolio weight in allocation is probably the best, and I would stand by my overall risk management policy and rule of that. However, I would love to hear your thoughts down below about where you think this company is headed in the future. What do you think of their upcoming earnings report, their new price targets, and are you practicing proper risk management for this stock? With that being said, don't forget to go and subscribe, and I will see you in the next YT video.